Hi, it's the Insurance Exam Queen, and we're going to talk about the elimination period on disability policies. To kind of help us understand this, let's talk a little bit first about car insurance. When you have a car insurance policy and you crash your car, in order for the insurance company to fix your car, you have to pay a deductible for them to then fix the car. In a disability policy, it's saying that, look, you're disabled, you're not working, you're not earning an income. But every policy pretty much comes with a deductible, not life insurance, but pretty much every policy has a deductible of some sort. If you have a disability and you're using your disability policy, do you have money laying around to pay that deductible? No, you don't. So they're not going to require that you pay them money so that they can send you money, because that's what a disability policy is. When you become disabled, they send you an income check as if you were still working so that you can still have money to live off of. So if you're disabled and you're not earning any money, it would be silly for the insurance companies to say, hey, we're going to send you money as soon as you send us money, right? So that's not going to work. So what they use, instead of a money deductible for disability insurance, they do what is known as an elimination period. And it's basically just a waiting period. It's a time between the start of the disability until a set time in which you are not going to receive any check from the insurance company. You have to take care of yourself during that time. So if you become disabled, you have a disability policy, your elimination period will kick in at the start of the disability. So let's say that this is the date that you got injured. Now your elimination period can be different. It could be 30 days, 60 days, 90 days, whatever it is that you want to set. And the same is true for car insurance. The bigger the deductible, the lower the premium. So the longer the elimination, the lower the premium. So you're going to choose which elimination period you want based on the amount of the premium. So if you choose a 30-day elimination period, that means that you will be waiting for 30 days before you can kick into the benefit period. And the benefit period is the time in which you can actually receive a check for as long as you are disabled. So you have your elimination period, and then you'll kick into the benefit period. Now, it's important to understand that with the benefit period, you're not going to get a check on this day. You're not going to get a check right away as soon as you start the benefit period. The payments are paid in arrears, which means that for the first month of the disability, the first month of the benefit period, you're not going to see a check either. You're going to get, let's say you're disabled in August. If you're disabled here in August, you have your 30-day elimination period, no check whatsoever. You'll kick into September and you won't get a check either. And then in October, you will get a check for September. And then in November, you'll get a check for October. So they pay you for the month behind. So it is important to know that with the benefit period, your first check will be in the second month of the injury, the second month of the disability, if your elimination is 30 days. But the benefit period will always be 30 days after you fall into, you won't get a check for at least the first 30 days. I'll do another video on the benefit period, so watch out for that. But let's go back to the elimination period. So again, the elimination period is the time between the date that I got disabled, and it's a waiting period until I can start collecting a check. It's usually 30, 60, 90 days. You choose it based on what premium you want to pay. And it's very important to know for the exam, this concept right here, they really love to ask a lot of questions about how the elimination period impacts the premium. If you have a long elimination, that means that you are waiting a long time before the insurance will send you a check. Now, the insurance company is actually hoping that during the elimination period, you get better, that you're not disabled anymore, and that you return to work. That's another reason that they have the elimination period. They're hoping that you actually get better and will return to work and will not need to collect off this policy at all. So the longer the elimination is, the lower your premium will be. Long elimination, low premium. Long elimination, low premium. On the opposite end of that, a short elimination is going to be a higher premium. The less you're willing to wait before they send you a check, the higher your premium is going to be. So long elimination, lower premium, short elimination, higher premium. This is like saying the difference between a long elimination would be like $1,000 deductible on your car insurance. Short elimination would be like a $500 deductible on your car insurance, okay? So the elimination period does impact your premium. They're hoping that you take a long elimination so that you can get better and not end up having to collect a check. So this is the elimination period. If you have any questions about it at all, please drop a comment below. I'll be happy to reply to you. You can also find more free resources for your state exam on my Facebook page, Insurance Exam Queen. And I'm also available for tutoring if you want to make sure that you pass the first time. Just reach out to me at insuranceexamqueen@gmail.com or my Facebook page or the comments. Pretty much get a hold of me anyway. We'll make sure that you pass the first time or the next time, wherever you're at in your journey. Have a fantastic day.